Good afternoon. Welcome to Daily Currency Insight from the Currency Desk. On Tuesday, we witnessed slight depreciation in the rupee against the dollar. This was mainly due to the negative data from the European front and at the same time some downside in the euro. Though the euro sustained near to just about 2-year lows against the dollar, but still the relative weakness was there to be seen. Today, the rupee has appreciated against the dollar, mainly on the back of positive Australian GDP data. The Australian GDP data came in at 1.3% quarter-on-quarter growth, which was double the expectations of 0.5% in the markets. This was a major positive for the markets, which helped the market move up. The Asian equity markets opening in the morning session were trading positive, and at the same time their positive growth was restricted due to the slightly negative data from the European front and more uncertainty in the Spanish economy. In terms of rupee, we expect some support from the equity markets which are trading in the positive, and at the same time we expect the rate to touch 55 levels. Hence, we recommend a sell for the short term. Coming to the European front, yesterday we had two negative data. Firstly, the European retail sales data, which declined by 1%, and secondly, the German PMI manufacturing data, which was again negative. More can be said about German negative data because this was the first negative sign shown by the German economy, which was otherwise like a silver lining in the otherwise cloudy scenario of the European economy. This makes market scenario more bleak as the strongest economy in the euro, that is the German economy, is not supporting. At the same time, again in the German front, we had the rating agency Moody's cutting down the ratings of several banks in Germany. Moody's mainly touted that this rating cut was mainly because of the losses that the German banks would have to write down and the increased chances of defaults. Coming to the Spanish front, the Treasury Minister of Spain has openly announced that it can no longer raise funds from the bond markets. Now, Spain requires funds mainly to fund or recapitalize its banks, which are currently running short of funds, which are estimated around $20 billion. Now, Spain cannot go for the bond route mainly because the Spanish bond yields have risen to a lifetime high of around 5.5%. This would increase the borrowing cost to a great extent. Now, due to this statement, the speculation of Spain requiring a bailout fund is constantly increasing. In terms of euro against the rupee, we recommend a fresh long above 69.50, but if it does not cross 69.50, we could well see the rate coming down. The pound, that is the UK economy, has shown much better data, much better stability as compared to the euro. But at the same time, there has been a lot of downside in the pound in the recent past. We recommend a fresh sell at current levels, or even better, for a short sell, one can wait for 84-83 levels because currently the trend is expected to be more sideways. In terms of Japanese yen, we have witnessed some correction in the yen against the dollar, which was apart from the recent appreciation in the yen. This was mainly because the trade deficit data in the Japanese economy is expected to increase. This increase in trade deficit is mainly being estimated due to the increase in imports due to the shortage of energy in the Japanese economy. At the same time, we have the exports being hit due to the appreciation in the Japanese yen. At current scenario, in yen against the Indian rupee, we expect slightly downside movement, and this downside would continue further if yen breaks the crucial support level of 69.60 in the spot. Thank you.